Hey traders, what's going on? Well, today what I want to do was just haven't did a lesson in a while, but want to go over a lesson basically on correct violation of a major support area. And the reason why I decided to do this right now, due to lately the market's indecisiveness and in a sense having transitioned between different time frames, I wanted to go ahead and uh, actually state what is a violation of major resistance. And really, this is a violation of any resistance area. And so with the choppiness, you see prices bouncing up and down, and sometimes uncertainties there if this area has really been violated. This is my major resistance area, which we classify as a SMTM area, and this also helps me determine the trend also. As you see, my chart is clear. The only thing I have on my chart is price, volume, and my SMTM lines that I use. So I don't use any indicators at all. I don't use any moving averages, any fib points, any trader pivots, or anything. I use price action to dictate all my entries, exits, profit targets, and everything's based off of price action. Now, the reason why I have this classified as major resistance is just an objective matter. This was the point where the bears had enough strength to bring prices to a new low. So this technically is the bears hangout point. So it will be sellers in here. If the bulls can get it past this point, then that's a significant meaning. That means the bulls have won a battle, and they can continue to go to the next area where their sellers might be. So traders use reference points and prices in order to stage these sell-offs and also these rallies. So right here, this is an area where the bears were able to take it to a new low. So as you see, as prices come along right here, prices is trying to come up. Actually, the bulls brought it here. The bears brought it down. Bulls tried to regain control. And as prices come up, the real thing what I want to note is it's continued selling pressure here. So as it's going up, it's continued selling pressure. That's why these tails are curling. But yet, note, while it's continued selling pressure, it's also continued buying, because if it wasn't buying, prices would be falling. So as prices are going up, supply is being absorbed. So as we continue to go, this right here was what people like to call a doji bar, which could indicate some reversals. But with reading price action, if you don't take into context everything, you can clearly be deceived and misinterpret these patterns. And as some traders that trade just off a price pattern alone, which I use price action, which I'll show my equation. And as you can see, price action equals price pattern plus trend plus volume plus SNR. We need all these to make a determination. So as prices, traders try to actually bear stepped up and tried to take this short, but what they failed to realize that it was a supply and demand that was created here, and in this area, some of this supply and demand that's in here needs to be absorbed before prices can go lower. Now, how much or how much demand is still here?
The time is 11.
We don't know, but we have to note this is there. So they actually tried to short this here, and when it's tried to short, these bears that were in here became trapped. When they saw this bar overcome, if you were shorted here and you saw this would definitely change your perception of the way that you thought prices would go. But as we continue to see, to get to the meaning of this, I want to show basically this is the area I want to get to. This is a major resistance area. For a trend to change, if this area is violated, the trend will definitely be violated. So this will no longer be in a downtrend. So what is the violation of an area? And as taught, we need a close above this pivot, and that's the normal practice and the normal thinking. So now, is this a violation of major resistance? So you can pause this and decide if this is a violation or not, and then I'll go over the answer. So you should have paused this to decide if this was a violation. And so what happens is, what is a violation of major resistance or support area? It's an area where the bears were. They had a point where they were able to rally enough bears to bring prices to a new low. So we want to see this area get violated. It's the bulls overcome this area and overcome the bears. That's, just simple logic. You want to see the bulls overcome the area where the bears were able to bring prices to a new low. So with this in mind, they did it and they closed above it. But they penetrated deep. But guess what? The bears were still here. They were still at this staging point, and this move was negated. So they brought it up and they negated this move. And what happens in the entire time frame, this is really just a top and tail. So at this point, this is not a violation of this area. What happened, supply that was here has pretty much been transferred to here. So this is my new reference point. Now at this point, I like to call this is a tested area. Now this is a tested area of major resistance, because I'm not focusing on this right here. This is my new focal point, because whatever supply was here has been transferred here. So no, this area still has not been violated. The bulls were still pushed back. They got a close above it, but the close was negated. As you see in prices, they still tried to go back up, which of course was selling because more bears were still here and they were able to take prices to a new low. This is not a clean attempt down, but the objective is they were able to bring prices down. And as you can see, any rallies back into this point met with some serious buying, because this is an area where the bears hung out, and this area was where the bears made a new rallying point. Made a point to bring prices lower. So in order for the bulls to get confident, we needed a successful violation of this area, which did not happen. So this is what I like to call possible Sucka-Bait. Let me put that up there. And why is this Sucka-Bait right here? Well, basically, people thought that this area was violated, and they thought that the bulls were in control, and they thought that this was just going to be a selling bar. And so they bought here. They bought and they tried to rally back up, but this really just turned out to be Sucka-Bait for them. So the bulls got trapped in this Sucka-Bait. The bears were out there fishing for suckers, and this is what happened. They fell for it, and here they go, bringing prices lower. Now they have to cover. And so these are different things that you have to watch out for. And without knowing if an area has really been violated, whether it's been tested, successful test, or what happens. So this is one thing that I just want to go over with all the choppiness in the market lately. Is so through reading price, I didn't need any indicator, anything to tell me that. Just by reading price allowed me to read fear and greed and make a determination on the likelihood. And this right here would have been a shorting opportunity. So why the best way to make profits is traders have to be caught on the wrong side of the market. If they're not caught on the wrong side of the market, if everybody sees the trade, then likelihood the trade is not going to go in that direction because everybody's expecting it. So in order for trades to really get significant meaning, somebody has to get trapped. Just like here, traders got trapped, so were able to take prices up. Traders have to get trapped. Just as here, they thought prices was bullish, and then prices went down and they tried to bring it back up, but they were trapped. So when they got trapped, it went down. So the best way to get moves, somebody has to get trapped. This is bottom line. So somebody has to be on the wrong side of the trade. Well, traders, until next time, that's it, and I'll see you guys next time. Later, traders.